Hey there, welcome to our journey through The Psychology of Money by Morgan Housel. Today, we're diving deep into the book's golden nuggets of financial wisdom, unlocking the secrets of the mind when it comes to wealth. Ready to reshape your financial mindset? Let's roll. The power of behavior. One of the big takeaways from this book is that personal finance isn't just about numbers and formulas. Nope, it's about something deeper, our behavior and psychology. Let me tell you about this incredible story from the book that really drives this point home. It's about Ronald Reed, a retired janitor and gas station attendant. Now, this guy didn't have a huge paycheck or a fancy finance degree, but he did have something special: discipline. Over his lifetime, Ronald managed to amass a whopping $8 million by saving and investing wisely. Can you believe it? What's truly amazing is that Ronald's success wasn't about making a ton of money. It was about how he managed the money he had. He had this patient, long-term approach to investing, and he knew how to live within his means. It's a powerful reminder that our financial behavior matters more than our income. But you know what else this book dives into? Emotions and how they can really mess with our investment decisions. See, when the market's on fire, we tend to get greedy and buy up stocks like there's no tomorrow. But when things take a nosedive, fear sets in, and we start selling like there's no end in sight. And guess what? That's a surefire way to buy high and sell low, which is basically the opposite of what smart investors do. The importance of saving. The book introduces us to the concept of the millionaire next door, where ordinary individuals quietly build substantial wealth through consistent saving and smart investing. They're not flashy millionaires, but their habits of living below their means, saving part of their income, and making wise investments have led them to financial success. Now, after hearing Ronald Reed's inspiring journey from janitor to millionaire, it's time for a little self-reflection. Are you, like these millionaires, consistently setting money aside for your future, regardless of your income level? Share your thoughts with us in the comments below. Remember, financial success often starts with a commitment to saving. The power of compounding. Now let's talk about something pretty cool that this book brings up: the magic of compound interest. Trust me, this stuff can make your money grow like you wouldn't believe. It's all about the power of consistency. So here's the deal. Even if you're not putting away a ton of cash, those little contributions you make to your savings or investments can add up big time over the years, and it's all thanks to the magic of compounding. Basically, the earlier you get started, the more time your money has to do its thing and grow. Think about it like this. There are two folks, investor A and investor B. A gets a head start, saving and investing early, while B decides to procrastinate and starts later. You won't believe the difference in their financial futures. So, what's the big takeaway here? Well, it's pretty simple. Start saving as early as you can, no matter how much you're earning right now. Your future self will thank you for it. Long-term thinking. Now, let's chat about something that's got to do with playing the long game. The book tells us that successful folks tend to be those who focus on the big picture, their long-term financial goals, instead of getting caught up in short-term wins. Take Warren Buffett, for instance, the big shot in the investing world. What makes him stand out? Well, it's his patience and long-term thinking. He's all about buying solid companies and holding on to them for ages, sometimes even decades. And guess what? That's a big reason why he's one of the richest folks on the planet. Warren Buffett's story teaches us that time is like a secret ingredient in cooking up wealth. See, when you hang on to those high-quality investments for the long haul, something magical happens. Your gains start to pile up and grow like crazy. So remember, building wealth isn't a sprint, it's more like a marathon. Think big, think long, and you might just end up on the road to financial success. Risk and uncertainty. Now let's dig into something pretty crucial when it comes to investing: risk and uncertainty. The book serves up some real nuggets of wisdom on this topic that can totally change the way you make investment decisions. So, What's the deal with risk? Well, that's about making decisions based on data and past trends. You can kind of see where things might go. But then there's uncertainty. That's when you're in the dark, and it's tough to predict what's going to happen next. Remember the financial crisis back in 2008? That was a real head-scratcher. Even the experts were left scratching their heads. Now, the book talks about a trick to handle known risks: diversification. It's like not putting all your eggs in one basket. By spreading your investments across different stuff, you can ease the hit if one thing goes south. But here's the catch. When it comes to uncertainty, diversification doesn't pack as much punch. So, what's the game plan for dealing with uncertainty? The book says keep some financial padding, like an emergency fund, or have a plan that can twist and turn when needed. When uncertainty comes knocking, it's easy to let emotions like fear and panic take over. That's when you make not-so-great decisions. So, knowing that uncertainty is part and parcel of the investment world can help you keep your cool, stick to your long-term goals, and not get swept away by those market waves. The role of luck. You know, this book really throws a curveball at the usual thinking about financial success. See, we often hear that if you work hard, have the skills, and stay disciplined, you'll hit the jackpot. But here's the twist. The book says, hold on, luck's in the game too. Picture this: where and when you're born can actually set the stage for your financial journey. If you pop into the world in a stable, prosperous place with great education and resources, you might have a head start. But if luck's not on your side and you're born in a less fortunate spot, well, things can be tougher. Now, luck's not just about where you're born. It's also about those moments when timing lines up perfectly. The book dishes out stories of folks who struck gold, not just because they were super skilled, but because they were in the right place at the right time. It's a humbling thought, really. This book wants us to look at financial success with a different lens, one that's got humility and empathy. It reminds us that not everyone gets dealt the same cards, and luck can be a big player in the game. So when you hit those highs in your financial journey, remember a dash of luck might have been in the mix. The cost of overconfidence. Alright, let's talk about something many of us might have been guilty of at some point: overconfidence. You know, it's when we think we've got all the smarts, skills, and insights in the world, more than we actually do. This overconfidence thing can make us take crazy risks and make not-so-great financial choices, all because we're too sure of ourselves. Here's a story from the book. Ever heard of day trading? Well, overconfident day traders think they can totally outsmart the market and rake in big profits. But here's the reality check. Most of them end up losing big time because financial markets are like a roller coaster you can't predict. The book also shines a light on those folks who put all their eggs in one basket, investing heavily in just one stock. Overconfident in their stock-picking powers, they're dancing on a tightrope of risk. What's worse, they might not even ask for advice or consider different viewpoints. They're missing out on some golden insights. So the book's giving us a wake-up call. Watch out for overconfidence because it can trip you up big time on your financial journey. Adaptability and Flexibility. You know, life and the financial world, they're like wild roller coasters full of twists and turns. This book gets that and says, change is the name of the game. Whether it's a surprise party or a sudden financial storm, life's all about unpredictability. So, what's the deal here? Well, the book tells us we gotta roll with the punches. Plans and strategies, they've gotta be as flexible as a gymnast. And that's where emergency funds swoop in as heroes. They're like your financial safety net for those times when unexpected stuff hits the fan, like surprise car repairs or unexpected medical bills. Having an emergency fund, it's like having a financial superpower that stops you from diving into debt or making rushed money moves. Now here's another twist. Your career path isn't a straight road. It's more like a winding journey. job markets change, new opportunities pop up, and industries shift. So, being able to pick up new skills, adapt to new scenes, or even explore different career paths can seriously boost your earning power and keep your financial boat steady. Simplicity in investing. So, here's a nugget of wisdom. Keep your investment game simple, and you'll likely come out on top. The book's got some neat tips on how to do just that. 1. Diversify with broad index funds. Think about tossing your money into broad market index funds or those cool exchange-traded funds, ETFs. They spread your risk across loads of stocks or bonds, so you don't need to be a genius at picking winners. 2. Set and forget. Take it easy with a set and forget approach for the long game. Build a well-balanced portfolio, toss in your cash regularly, and resist the urge to tinker every time the market sneezes. 3. Automate contributions. Make life easier by setting up automatic contributions to your investment accounts. No need to babysit your investments. They just grow while you kick back. 4. Rebalance periodically. Keep your portfolio in check by giving it a tune-up every now and then, like once a year. This way, you stick to your long-term goals without breaking a sweat. 5. Keep costs low. Don't let fees and expenses eat your returns. Go for the low-cost options like index funds or ETFs and watch your money grow. 6. Avoid market timing. Seriously, trying to predict when to buy or sell stuff in the market? It's like trying to predict the weather in outer space, super tough and usually pointless. 7. Emergency fund. Last, but not least, stash away an emergency fund in a plain, easy-access savings account. It's your financial safety cushion for when life throws you a curveball, and it keeps you from having to cash out your investments when the going gets tough. Contentment and Wealth. So, this book takes a step back and says, hold on a second, folks. See, the usual idea of wealth is all about the size of your bank account and the stuff you own. But this book, it's got a broader view. It says wealth is more than just the numbers. It's about feeling financially secure, having peace of mind, and finding satisfaction in your life. Now, here's the kicker. Chasing after more wealth doesn't always lead to more happiness. Sure, having enough to cover your needs is vital, but obsessing over it? That can lead to stress, burnout, and strained relationships. The book's got a gem of wisdom here. It's all about finding contentment with what you've got. And guess what? It throws in a dash of minimalism too. You know, that idea of living with less, focusing on what really matters, and not constantly chasing stuff. Turns out, adopting a more minimalist mindset can lead to more happiness and contentment. So, as we wrap up our exploration of the psychology of money, remember, your financial future is in your hands. It's all about those behaviors, choices, and the way you think about wealth. If you found these insights as eye-opening as we did, give us a thumbs up and hit that subscribe button for more fantastic tips on personal finance and building the life you deserve.